Hi, this is Randy Finney with Right Side of the Chart, and today is Monday, October 1st, 2018. As we start off the final quarter of the year, today is the first day of Q4 2018. I wanted to take a look at, I really want to focus on the longer term outlook, what to look for this quarter, where we might be positioning. So this, I'll start out with the near term outlook. That is, what to expect here today, next week, going forward. And then I'll roll into and spend most of the time here on the weekly charts. I poured over the charts over the weekend, and there's some developments I want to point out in various sectors. So what we'll do is I have a watch list of different sectors or key stocks. We'll go through there, and I just want to point out again some developments that might shape where we're headed near term, or I should say, well, near term and more intermediate term, potentially longer term. Let's just start out with the short term charts. I wanted to wait till the markets open, so it did. It's 9:30 exactly when I started this video, and here's SPY. So what we have is a backtest now of that trend line. I'm referring to this yellow trend line here off the early, actually late June lows. It's this yellow trend line, pretty well defined, and recently I've been highlighting that, and this 291.62 level is the overhead resistance level. So what we have here is a perfect backtest. You can see as I zoom in here, and again, the market's just open, so this candle's very small. Boom, we kissed it. So, that's still resistance. And, a solid 60-minute close, especially daily close up there, would be bullish because the next stop, there's really nothing on the charts that I see is, we're so close to the highs that would open the door for a shot to new highs. But as of now, we had divergence when we broke below, negative divergence I'm referring to, and that is resistance. So let's see what happens. Again, a rejection there, a move back down below 291.62 into this trading range here, especially break below 289.39 would be bearish, while again, a recovery of this probably going to open the door for new highs. So we'll see how the day unfolds. That's SPY 60-minute chart. And again, the target here would be if we do break to the downside anytime soon, this longer term trend line that comes off the early April lows. I'm referring to this white trend line here. So that would be our, let's just say, minimum or preferred swing target right now. On SPY, let's look at QQQ. Not a whole lot new there either. Same story. I know it sound like a broken record, but that's what's been happening here is just a back test. This is a longer term trend line. This is the trend line that I just showed you on SPY that comes off the early April lows, I believe. We'll look at this in a second. It goes to the left of the chart here. I have to go to a longer time frame. But you can see other than this one little whipsaw breakout here, we've been back testing, and if we zoom in really tight here, you can see there it is again. So these trend lines, it's a little bit sloppy. There's a lot of volatility in QQQ. There it is, captured those recent highs. And that's it. So a back test there. Here's a potential uptrend line. And the key level, if we do fail on this back test anytime soon, 184.86, watch that. That's been support here. It was resistance here, resistance, support, resistance. So those are the levels to watch. This trend line, 184.86 is resistance. And of course, this uptrend line, we just continue to back test. And then new highs are not far away at all. So we're that close now. Why not go ahead and pop it and make it official? But either way, those are the levels to watch on QQQ. And again, I'm going to get into sectors and some commodities and things here in a second. So yes, that trend line there it is, comes off the early April lows, and that's the one we've been back testing. And just real quickly, here's NQ, the Nasdaq 100 E-mini futures. This is a hourly chart, goes back 3 months. And again, whether whether we punch up, take out the new highs or not, the outlook is the same to me. We had back here, you can see very clear negative divergence. We had prices making higher highs. Again, this was back here in July. Very clear negative divergence, and that led to this sizable correction right there. Another divergent high, negative divergence, same story. Another high right here, divergent high, correction, and you can see most recently we have this divergence right here, pretty clear. And so to me, it's more of a matter, do we punch up through the previous highs and then roll over or not? But you have this uptrend line to watch, pretty well defined on NQ, a little bit better than QQQ. So there it is. So we've been back testing that same trend line right here in NQ. We have this minor trend line below, and again, sometimes when you get this close to new highs, it's like a vacuum or a magnet usually pop up in there. Anything's possible. Can these divergences be burned through? Sure, it happens, but more often than not, it doesn't happen. I'd say more often than not is 90% or better, whereas these divergences, when they're pretty clean like this, do play out for a trend reversal or correction. And I'm still looking for, again, this theme of this video is more all about Q4, what to expect in the fourth quarter. Um, I'm still looking for a test of those lows back here, 74.37, this level right here. I think we're going to see that sometime soon in the next, I would say in the next few weeks here. And I would also expect by the end of the year, I think we come back in and at least test these lows. Those two previous reaction lows from early 2018 there. Those are pretty important lows. Those are the largest corrections back to back that we had in a long time. And again, you can see here is that same trend line, that uptrend line off the early April lows, pretty well defined, still back testing it from below. Any new high at this point will be a divergent high, and divergence as well out here on the more significant daily chart. Now let's move over to the weekly chart. I'm going to start out here with the non-equity assets. In other words, I've talked a lot about, and I think especially going forward. I mean, if you can go back in time and just throw all your money into, a index fund, especially the Nasdaq 100, and turn, shut off your computer and walked away. If you could have done that in March of 2009 when the market bottomed, great. But hindsight's 2020, and my point is, you didn't need asset allocation looking back. But looking forward, I think it's going to be critical to a portfolio, especially long-term investors. I talk about asset allocation, especially tactical asset allocation, moving money around. Not so frequently, but paying attention to which asset classes offer the best risk reward profile, and also a way to diversify your portfolio. So if you're wrong on one call, let's say your stock portion, then you're doing good on your bonds or commodities. And within commodities, that's where we talk about it. We have all different types of commodities, some going up at any given time, some going down. So those are your asset classes, really stocks, bonds, commodities, and you could call cash an asset class if you want. But and then down, we drill down, and I think that we have seen this, and this is what I wanted to say this as well. We're going to continue to focus on sector rotation. We have the market making, testing about to test new highs or make new highs if it can punch up a little bit more. But yet you have some sectors that are in their own bear markets down well over 20%. And we're going to go through some of those sectors now. So the point being, bull market or bear market, you can trade all day long. If you're trying to trade the broad market, it's frustrating. If you're trying to actively trade it, especially when it locks down in a pretty low range, it's just been steadily inching higher. There's been some pullback ops, but again, for a very active, nimble trader. So what we're going to focus on a lot going forward is sector allocation, and whether the overall trend in the broad market is bullish or bearish. There's always sectors, just like there are always individual stocks that have clearly bullish chart patterns or clearly bearish chart patterns and technicals. So we'll continue, and we're going to go through that right now. All right, so more so of the sectors, which we'll get to in a second. Let me just start out with the non-equity asset classes. So Treasury bonds, there's many types of bonds. Junk bonds are more closely correlated to the stock market, so we're not going to talk on those. Those are low-grade bonds. We're going to talk on Treasuries because I do think, and I'm still bullish on these in fourth quarter and possibly beyond, meaning I believe interest rates will start to come back in, especially long-term rates. Remember, the Fed only controls short-term rates. They do not control the long end of the yield curve. That is controlled by supply and demand market forces. So you have this TLT is a long-term Treasury ETF, and TLT, as I've mentioned, looks pretty good here, I think. There might be a little more downside. We're coming up on a pretty decent support shelf. This is a 10-year chart, and from here on out, unless I specify, we're going to be focusing on weekly charts. So these charts go back a decade. They're 10 years. They're weekly charts. Every candle's a week of trading. And so what you have are these two lines here. these two levels, and that is a support zone. When I have two lines in close proximity, some of these reactions happened at the bottom of the support zone, like here and here. Some happened at the top, like here and here, and most recently. So what I'm seeing as I zoom in here, we are now at the top of that support zone. So TLT could certainly reverse there. And, as a trader, when a stock or a security falls to support, I have one of two, if I see enough evidence in the charts, I'm going to do one of two things. I'm going to prepare to buy that dip, buy that pullback to support if I think the security will bounce, or if the indicators and everything else, price action, volume, everything tells me that that support level may break and that might be a short setup, then I'll look to position short. In this case, I expect a bounce off here. Now you can see I have this. This is a divergence line. Right now we technically have negative divergence, but I'm looking at the PPO. We're going to spend a lot of time on this today. The PPO is currently pointed down. That tells us the momentum is to the downside right now, and therefore it could continue. So this is what I call potential divergence. Right here, we did have, well, no, we almost had. Yeah, we did. We made a bullish cross. We had confirmed divergence, but it didn't play out. So the PPO's made prices made one more jog down. The PPO made another jog down. So if and when we reverse, as long as we do so with this divergence still in place. Now, if we have to pull this line down a little bit lower, so be it. As long as we don't go down to a negative slope beyond, the flat level there. So what I'm expecting is a reversal anywhere from here. I'd almost prefer a thrust down to that bottom of that zone around 115. Why would I prefer that? Well, if you're looking at a daily chart, even going back a few years, you can see all the way back to late 2016, the top of this zone around 116.50-ish, give or take, contained all the pullbacks on TLT. And so if we get a break down below that level, once from 116.54 down to 115, that's better than a 1% drop in treasuries, which is a pretty good move for treasuries. That would be a nice flush out scenario. It would wash out some longs, would suck in some shorts, and also if we get a reversal there, set up some nice divergence, and that would also set the stage for a nice rally. This also meshes with what we're going to get to here in a second with a correction, a sizable correction in the fourth quarter in the stock market, because treasury bonds are the one of, if not the king of flight to safety instruments. When things get ugly in the stock market, institutions and individuals will flock to safety. They'll flock to cash. They'll flock to bonds. They'll flock to gold, and at times. But treasuries are probably your go-to, especially for institutions. And so there it is. This would be the reversal. That was supposed to be a line, not an arrow. It just shows you some resistance right there, maybe a reaction there, and then we finally go on to break out of that trading zone. So I'm not looking for a huge move. I know the downside's limited on treasuries because we're coming off ultra low rates. But again, uh, what will happen too if we get that correction in the stock market, which I'll get into the charts here in a second. I know it's going to be a long video. That is going to then dampen the outlook. You'll start to see forecasts for the economy go down. Everything, this whole stock market lift, at least in recent years, has been exacerbated by consumer confidence. Market goes up, everybody's portfolios are fat and thick. People start spending money, it fuels on itself. I mean, that was the Fed's intention originally, going to doing the quantitative easing and the low rates to spur. And Bernanke at the time came out and said it outright. They wanted to lift asset price, lift the stock market to lift consumer confidence, get people spending, and that's what happened. But get a little ahead of itself here. So, anyways. Trust me, when the market pulls back, consumer sentiment goes down, spending slows, economic forecasts will go down, and that's what brings down the long end of the Treasury, will lift bonds. In other words, rates go down. If the forecast for the economic growth goes down, so do long-term interest rates, which means the prices of bonds go up. So this kind of works well with what I'm seeing in the equity market. So there it is. I probably spent more time than I needed to, but I just wanted to say that. So, we're not going to go to the near term and 60-minute charts. This video would take long enough. It's going to take long enough as it is to go through these sectors. But I think that's a key component, especially for more risk-averse investors, traders, or even those that just want to have a well-balanced portfolio, especially your long-term stuff, IRAs, 401ks, that kind of stuff. All right, so other asset classes other than equities, we have gold. I've talked about gold quite a bit, and this will be a common theme as I go through these charts here. Is I wanted to point out what I'm seeing here, and one of my go-to indicators, especially on long-term charts. If I'm using intraday charts, I may use the MACD, but on long-term charts, especially things with large price ranges from their highs to their lows that you're looking at on the chart, a PPO does a better job, in my opinion, than the MACD. Very close cousins. Again, you can read up on the two, but this is my go-to proxy long term. And it's a momentum indicator. And you can use it in many ways. As you guys know, I use it to look for divergences, just like I do on the RSI and sometimes some other indicators. But you can also look at a couple other things on PPO or MACD. And number one is zero line crosses. You have the zero line, that's that dotted line in the middle. When you cross down below the zero line, like you did here, that's bearish. Oops, I tried to box that in. That tells you had a bearish cross back here. The trend was bearish and it remained bearish. We flirted, around with it for a while, got above, it was bullish, we had a nice rally. So that's one way that traders will use the MACD or the PPO, those zero line crosses, bullish if it crosses above, bearish below. And the other way is watching the two lines cross. Um, so you have the PPO line and then the signal line, which is a 9 EMA of that line. And when the two cross, if we cross over soon in gold, which I think we will, we get a bullish crossover, that's a buy signal. Just like we had back here, you can see there was a bullish crossover right there. And boom, we rallied, and that was a pretty nice rally. That was one of the strongest rallies in years in gold. And I like to use this in conjunction. I'm going to spend more time on the PPO, but again, I don't use any single momentum indicator, any indicator as standalone buy and sell. I like confirmation, and so I like to use it in conjunction with RSI. So you can see here, we got the bullish crossover on the PPO and a clean bullish crossover. That's the other thing. I like to see clean separation from the lines. I stay away from using these momentum indicators when you have a security in a flat, choppy, sideways trading range. You tend to get more whipsaw signals. It's these clear trends when it does a better job of giving you clean buy and sell signals. And I'll pull up the histogram in a second and show you another way to look at the separation between the lines. So there it is. So we had oversold, I'm sorry, and then a bullish crossover. And what do we have now? We had oversold recently and a pending. It hasn't happened yet. And we'll do this. I'll probably put this up now. PPO histogram will tell us when it crosses. That just gives you the differential, the distance between the two lines. The wider the distance, the higher these histogram bars or lower the histogram bars are. And so when you make a cross, when these two lines cross, this will cross from red to green, the histogram. So why don't we just put this up here, right there, right under the PPO. Okay, the way I'm tracking on this video time-wise, I'm going to have to run through these sectors pretty quick, but I already explained the gist of what I'll be looking at, and we'll go through and look at various sectors. There it is. So on gold, as I said, we have we had recently oversold. We're still at that oversold level right now, roughly 30 and change, but I think it'll happen soon. That's still my expectation, and I'll cover euro, everything else in a separate video. I've put a lot of updates on gold recently. One other commodity we'll watch, USO. This is the crude oil ETN. Here's a multi-year basing pattern, and we broke out of that multi-year basing pattern right here. It's that shaded box, this shaded box right here, and that was bullish. Broke out, back tested, moved higher, but we've been moving higher. We've had quite a move. There's divergence there. Now that I put up the histogram here, it kind of makes it harder to see. I have to stretch these out a little bit, but we do have or did have divergence. Yeah, we have it still as we go to make a new high. Recently made a new high in crude, and I'll have to pull up the charts of WTIC, West Texas Intermediate Crude, to get a better feel. But that's that. So I think the bulk of the run, we're at near the end of the run, at least for a while. We'll probably have a nice correction in crude soon, but right now I just don't see enough in the weekly charts to really say, and again, the weekly charts are not exact timing indicators. They're helping to paint the bigger picture. We'd have to go down to the daily charts, even the 60-minute charts, to identify or look for an entry on any longs or shorts. All right. Okay. Let's now look at the sectors. Let's just start with XLU. This one's a good example of what I'm seeing. So again, 10-year chart, here's a long-term trend line. So we're going to use trend lines as well. Here's the utility sector. This is a sector to me that appears to have topped, meaning end of bull market right here. That's my opinion as of now. Based on everything I see in the charts, I see a decade-long trend line right there. Again, if you're not familiar, this has been the longest bull market ever in history. We've shattered all records. And so we know it's long in the tooth. Doesn't mean it can't continue on for a while. It just says, statistically speaking, it won't continue much longer. But again, statistics are dynamic. They change over time. So if this thing goes another 2 years, then so long. We have now the new record in the longest bull market. And it's going to skew the averages. All right. So what do we have? Big divergent high. We had negative divergence at the high there. And again, I'm watching this PPO. So what I see here is very clean separation. If I put up the histogram, you'll see we just now have what looks like a bearish crossover. So the bigger picture, and again, I take all this in conjunction. We have a breakdown of a 10-year, decade-long bull market uptrend line, breakdown, and simply a back test so far with a rejection there. And this PPO, again, being a trend indicator, tells us that trend, this uptrend, this what I view as a counter trend rally, was likely over. This is clean separation. That's what I like to see. Again, if I put up that histogram, there it is. So when I talk about clean separation, and if I don't mention on all of these stocks, take a look at these, what I call hills. I ignore these little tiny hills, this is again when the lines are flattening out, things are trading ranges tight. I like to see the clean separation like this, these hills, and then when you get that crossover, that helps define the bullish and bearish trends. Again, so you have the bigger the hill, the better the sell signal. Now, let's take a look at that. What does that mean here? Let me just take the crosshairs. So here we had a big, nice green trend where the PPO was in bullish territory above the signal line, and we had a crossover there. And you can see it didn't capture the top. You could almost see the momentum. You could see the momentum coming down. You could see that a cross seemed imminent, especially at this point once the PPO topped. So pretty much, and I'm not saying again this isn't a standalone buy and sell signal, but you could have seen the momentum turn and got in a little earlier. But confirmation came when they crossed, and that's where I'm putting the crosshairs. You can follow it down to the histogram. You can look right now at where the crosshairs meet on the PPO, and there was considerably more downside. And again, keep in mind, we've been in a bull market. So these are just corrections within a bull market. These corrections, once we're in a bear market and you get these signals, the corrections are going to be a lot deeper because we'll be in a primary downtrend. So with that being said, these are the biggest corrections that you've seen in XLU. Here is a nice hill right here. If I put the crosshairs, boom, it captured right here. Got you, told you, warned of this trend. Here was another big green hill. You had a little bit of a whipsaw signal there. Again, it's not a perfect indicator, but it does a pretty good job. So this was just a continuation of that hill right here, and then boom, there was your sell signal. Again, these are the biggest corrections in XLU throughout the bear market, and that's what I'm looking at. So we had another green hill here. We got whippy for a while, but then finally, so if you can look at it this way, and again, like I said, they're not perfect. Consider these two whipsaw signals, and really the green signal. Finally, you went to a sell signal right there when the PPO made a definitive cross. But again, got to be careful when it's sloppy like that and it flattens out. You get whipsaw signals. So it's these clean separation. The clean separation right there works in reverse. We had a buy signal. We had a big red hill. Crossover to bullish, and that was we had a little blip, but there was an uptrend from there. There was a sizable lift in utilities. There was a little back test of the zero line. So sometimes when these lines cross over, they'll test each other and then bounce off. You can see the PPO line bounced off the signal line, stayed bullish to right now recently. And you can see now, as of today, actually, we're in a new trading week. We have a bearish cross. Yes, This is a weekly chart, so really all that matters is what happens at the end of the week. But when I look at the way this is coming down, rolled over, just like back here, I said you could see it peak and come down. Usually you're going to get that cross. They can bounce, but they usually bounce at low levels. They usually don't bounce so much at high levels. It can happen, bounced right here. So you just have to wait and see what happens. Okay, we'll go a little faster now that I wanted to point out what I was looking at. So the things I'm looking at are divergences on the weekly time frame. So here's semiconductors. This is DJUSSC, the Dow Jones US Semiconductor Index. Here, let me do this for you. Let me make that. Let me make the. Where is it? Scaling, colors, grid, symbol, watermark. That's what I wanted. Okay, I'll turn that up so you can, if I don't make mention what we're talking about, there it is. All right, so you can see we had negative divergence, and these corrections don't look like much, but they were big. This one was 20% or so. Here's another correction in the semis, came after divergent high. That was a 27, roughly 28% drop, and there it is. Recently, we had a divergent high. We broke down. We were below trend, very well-defined uptrend line, very clean divergent high, and these indicators are pointing lower. So that's the DJUSSC. I can do the same thing with SOX. There it is, negative divergence at the high recently right there. And we're in this triangle type pattern. Watch that 40-week moving average. But from everything I see on this chart, just like we had bullish divergence right here, it works, both ways. But you can see we had that negative divergence. We don't have much as far as a PPO signal line, PPO crossing. This is flattening out. The semis have been compressing in this symmetrical triangle pattern. The trend is still that line is below, the PPO line is below the 9 EMA, and they're headed lower. So this, to me, again, is another sector which I believe has topped. It's just waiting for the rest of the market. There's a few components holding it up, but that's the semis. And again, this is painting a big picture because if we look at these corrections, they're not run of the mill. They're about 30%, at least 20. On average, is 20 something percent. And again, one of these may end up being a more significant top when you're 10 years into the cycle. These were just corrections within a bull market. So keep that in mind. So let's look at a couple more. IYR. Here's the REITs. As we know, we have a short on the REITs right now. And again, I'm looking at the PPO right now, and I'm looking at, right here, we had a clean separation. And this is a nice chart to show you. So let me just circle these. Clean separation, clean separation. This is a little sloppy. Now we have clean separation. So let's just look at what happened back there. Let's put a crosshair here when we had the bearish crossover with clean separation right about there. And you can see from here to here, the REITs fell about 18% from the point of that crossover. I'm not catching the high. I'm talking when that crossover happened. Here was another clean bearish crossover right about here. And from there, I have to move that trend line, grab right about there to measure. We had about a 15% drop. So again, these are the biggest corrections. Here's another one right here. And it caught all of that. So my point being that these are the biggest corrections that we've had in the REITs. And look what happened. They all came with clean separation, not these flattening out lines like this. Stay away from that. That's whippy, that's sideways trading range. But when you have these clear trends, without fail, it told you that a big correction was coming in the REITs. IYR is the go-to, the one I've traded for years. It's been around longer than the one that DJUSR. I'm sorry, there's another one I'll get to in a second here. But that's it. So there's your bearish crossover, and we're short the REITs, and I'm going to continue to press that short. We got a little kickback rally so far after the first target on SRS was hit, but I think there's more downside. And again, I'm talking bigger picture here. I'm talking what to expect in the fourth quarter of 2018 and possibly beyond. All right, let's go through the rest a little bit quicker. GDX, well, I've talked on gold. I already covered gold. GDX will follow gold. It's just as simple as that. But there it is, oversold right there. Last time we were oversold, GDX was right here. We had nice divergence leading into that low, and that actually marked the end of the bear market. We had a huge rally from there. So it looks like the PPO is starting to curl up here. It was flattening out here in the sideways trading range. That's, again, when you stay away from it, there's no predictive value, in my opinion. But when you start to get some clean separation like now, look for that bullish crossover. We're coming off oversold levels. I think we'll see a nice rally in the miners in the fourth quarter. JJCTF, that's copper. Copper's looking better than a lot of things out there right now. Looks like a potential bullish cross in play. We had a bullish cross right here with clean separation. You can see what happened after that. We had a bearish cross right there, and you can see what happened after that. Gold I already covered, pending bullish cross on gold. SMH I already covered the semis via SOXX and DJUSSC, I think it was. Tech sector, and we know this one has to break. I've covered this ad nauseum, more on the daily chart, but here it is on the weekly chart. You had a trend line there, of which a very well-defined trend line. You had some divergences along the way when we were above trend, and those all led to nice corrections, 10% or more around there. And then finally, this little divergent high looked innocuous enough, but it was the one that triggered a break of the primary trend line. And then from there, you had like a lot of securities that day, or well, there was a period, one day in there, trying to grab the high. I had to move that trend line. So one thing I don't like about this software, you have to move the trend line or it pulls. And that was a 28% drop. Most of that drop came on that one week. We had a mini crash there in a lot of securities, but that did happen. Somebody was filled at that level. That's what happens, and that's also why I warned and I talk about the risk reward being so lousy. I know people get frustrated because I've been talking about that for a while, and we're going uptrend, we're going up, but things happen fast, and I believe they will happen fast because this is a very long in the tooth trend line. The market is the most overvalued it's been by some metrics in history. And we're going to get a break of this trend line, and I don't think we're going to limp on down. I think we're going to see some very fast and hard selling, and I think it's coming based on everything I see here in the fourth quarter. But there it is, big negative divergence. Right now. So we're above trend. We just need to see that trend break. There's not a lot of separation on the PPO, so we're not going to try to extract much from it on the XLK other than the fact there is divergence. IWM, same story, negative divergence trend line. So that's also the key. Look at these trend lines. A lot of that's what you need to see. And when you start to see IWM, XLK, the tech sector, all come at those trend lines and approach them, I think based on these divergences, the next time we come down there, we're going to break them. That's my opinion. And again, that's a long-term trend line on IWM. If you're confused because of the short, this is a daily trend line that we're under right now. And we're still below that. We're still below that 169.70. I just jumped over to the daily chart because that's an active trade, and I still very much like it, despite the fact that S&P and QQQ are threatening new highs today. XES, that's a sloppy chart. See how it's flattened out. PPO, I can't extrapolate anything useful from there. So let's just move on. UUP, dollar, as I maintained, I'm bearish on the dollar, looking at a major top in the dollar. Let's just take time here to look at this one real quick because this has a big impact on gold. There was a clean separation, bearish crossover, clean separation, bullish crossover, clean separation, bearish, a little semi-clean. It whipped around a little bit, then bullish, bearish. Now let's look what happened at those 3 points here. I have to clear out those annotations. Crosshairs there, so it told us a bearish crossover. That wasn't a great timing indicator. There's a little kickback rally, but from that point that it gave us that sell signal right about here. That was the biggest drop in many years in the dollar from there. So that told you to get out of Dodge. But right here, bullish crossover. Didn't get you in exactly on the bottom, but it let you get into a very nice rally. That doesn't look like a lot, and it's not. The dollar doesn't move much in percentage terms, a dollar index. So that was a pretty, as you can see, one of the bigger trends, at least in recent years. Nice counter trend rally. Said get out. There was a little more downside from that point. Said get back in, and then boom, kept you in here all this time up until now. And you can see we just recently crossed over. The lines crossed right about here. So that's the first bearish crossover that we've had since this one, and before that was this one. And so that helps confirm. We're also, by the way, that crossover also comes with oversold, coming off overbought conditions recently. XOP, not much to see there. Mining, this is metals and mining, industrial metals, I believe. And just move on there. There's not a lot. It's actually more bullish and bearish. I should jump back there for those of you interested. Looks like the PPO is starting to curl up here. There's not a lot of separation. I'm going to have to go through these fast. Now I'm hitting the 33-minute mark on the video. PB Biotech, so it's pretty clean separation. Just recently crossed over. We had a bearish cross right here. We had a bullish cross right there. So not the best. This is a choppy one. You can see not a lot of separation between the lines. And again, if you can't see the separation, like here on Moo, let me go back to PB because I know a lot of people are interested in the biotechs. That's where you put up the histogram and it gives you a little more insight. You can see the separation here visually, and you can see we recently had a bearish cross. Last time we had a bearish cross was right there. Didn't get you much. Couple weeks more of downside. We had a bearish cross there. It gave you about 4 more weeks of downside after that. But you can see mostly the trend has been up, mostly green bars. So again, use that histogram to just make a little bit better heads or tails of whether the lines have crossed, and more so, you can look at the hills. Are they rolling over? Are they moving down on the histogram? All right, move SPY, that's equal weighted. XLP, here's one that really stands out to me. Clean separation in the PPO. Right there, we had some clean separation. Let's put up the histogram on this one, have some fun with it. All right, so here's some green hills, a few little whipsaw signals. There's a sell signal in XLP. You follow up to the crosshairs right here. Caught that correction, one of the largest in years there. Almost about 8% roughly. Nice bullish crossover, told you to get in. There was a green hill, and boom, you got a red crossover. And yes, there was more downside, and more so in time. This is months, so we're looking at a weekly chart. So that was a 4.5 month correction. It might not have been huge in percentage terms because again, we're in a bull market, but it got you out. And it's just again helping to identify the trend. That's what this video is all about. There was your next bearish cross right there after a big green hill, where I have the crosshairs. The bearish cross came right there, and boom, got you into one of the biggest drops again, about 11% or so from that point, not from the highs, from the point you had the bearish cross. So now you had a big green hill, bullish, told you to get back in, ride the wave, and you can see this hill falling off quickly. Sometimes it looks like it's going to cross, you get a little kickback. But again, that's where the momentum's headed now. And again, taken into the bigger picture of things, and that's what I'm looking at here. Normally, if we were up here above this trend line, then I would say, okay, well, maybe we're going to bounce. Maybe this green hill will grow larger and larger. But no, we took out this trend line here. We broke down, back tested, and so this looks like a counter trend rally and a new downtrend to me. And so when you get this crossover next, well, we'll probably it'll probably signal or confirm that the next leg down in XLP is underway. I don't know if there's any more. I have to wrap this video up here, guys. I had no idea it would go this long, but there's just so much I'm seeing when I look at these charts. Here's another one I mentioned recently. I'm looking to add maybe as a short soon, XRT, the retail ETF. There's the histogram. You can see we just recently crossed red. We also broke a trend line. So I take it all together. You had a trend line, an uptrend line, a wedge type pattern, negative divergence right there. You can also draw divergences on the histogram, by the way. People use that. Sometimes you don't see the divergence on the PPO or the RSI, but you'll have divergence bullish or bearish on the histogram like you did. Here's an example right there. There was marked a low. There was positive divergence on the histogram. We didn't have it on the PPO, but you can see the histogram was showing you divergence. So that's another useful tool for using the histogram. I don't always keep it up on my charts because I like to keep them clean and simple. And I've been doing this long enough that I can look at the PPO and pretty much tell you what the histogram looks like. But I think it's a good tool. And point being, so there's the divergences you can use. You can use the zero line crosses, which again are the same zero line here as is. Oh no, I'm sorry. This zero line represents these two lines crossing. And the other thing here is we do have recently, and now this is week 2, you can see the histogram's gone red. It went red last week. That gave you the crossover right there, confirmed a bearish cross. And now, so far this week, it's even deeper in red territory. Now, why is that? Today's Monday, we're up, XRT is up 0.39%. Why is this histogram even lower? Because the momentum has shifted. So you're up, but we were headed up at a pretty good clip here, pretty good momentum going in there. So even going sideways now takes those momentum indicators and rolls them over to the downside. So that's it. I'm going to have to stop here. If there's any other sectors that stand out, let me just claim. Now I'll mention XLF because that's an important sector in the economy. There was a cleanup trend line, negative divergence, big divergence too. We had almost a year-long divergence. We broke below it, and you can see the financials are sucking wind. They are not making new highs. They're not even close to it like the rest of the market. That's a tell. We recently had a bullish cross, but now if you look, you can see this was a pretty lackluster rally here. And if I put that PPO histogram back, you can see there it was. So we had a little rally, but look at this. We're about to make a bearish cross. So if the financials go much lower, this will just prove to have been a little, we'll call it a bear market rally, or at least a counter trend rally. Again, we're well off the highs, mostly sideways. I don't want to extract too much into it. And you got to give the benefit of the doubt to a lot of these sectors with the broad market still making new highs. But there it is. So we're looking for a pending cross, and especially if we can get this signal line, the 9 EMA. I like to see that as a trend indicator trading either above or below the zero line. And right now it's above, but if we cross down below, that will put this trend indicator into bear market territory or bearish territory. Last time we made a bearish cross was right about here, and it stayed, that white line stayed below until right here. And so it kept you out of there. There was a sizable correction, both in price and time. And then it told you, okay, bullish cross, and it told you from this point here all the way to even to right now that the trend was bullish. And so if that crosses over again, that's another trend indicator, another check mark that the financials have probably put in a top right here. All right, we're going to wrap up here. Very long video, but I hope you found this one useful. And again, I'll from time to time make sure to touch on the bigger picture. I just won't probably take so much time because there was a lot to cover in this video. This has been Randy Finney with Right Side of the Chart. I hope you enjoyed it.